Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so let's make a full breakdown of the situation that we currently have on Euro USD. Now, the reason for which I decided to speak about Euro USD in today's video is because the pair is very near to providing to us a good trading opportunity. So obviously, I want to share exactly the full situation that we currently have, since the market has already created exactly the move that we wanted to see from our previous analysis, to show you where we can be looking for the next potential opportunity on it. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technicals and our order flow analysis, we will be able to understand where are the best probabilities for a nice trading opportunity on Euro USD, which is the most traded pair in the market. Now, starting here from the monthly time frame, what we have is a market which has just provided a nice impulse to the upside, followed by a correction, and generally speaking, after an impulse and a correction, what you expect is for the market to provide a continuation to the upside for the creation of a higher high. And in fact, that is exactly what the market did. The market provided this impulse, correction, and impulse pattern to the upside, completing the pattern itself. Now, after a market creates a higher high, what it actually means is that the market has broken an area of resistance, because a previous high in the market is simply an area of resistance. So we have here previous resistance, which the market, in creating the higher high, has broken to the upside. And as you know, there is a very important rule in the market. When you have an area of resistance and the market breaks above that resistance, the previous resistance is turned support. And in fact, the market is currently testing this previous resistance, now turned support. And when you have a retest of previous resistance turned support, you expect the market to provide a rejection to the upside, possibly for the creation of a new higher high and completion of this impulse, correction, and impulse pattern to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that at the moment we have a perfect 50% retracement, which is lining up with the previous resistance, now turned support, creating a confluence of support inside of this area from which we can expect the market to provide a rejection to the upside and possibly the creation of a new higher high, as we have already seen. So at the moment, we are testing support with a lot of demand inside of the area from which we can expect a rejection to the upside. Let's go down on the weekly time frame and see what we have from a weekly perspective. Now, here in the weekly, we have clear structure that the market is currently rejecting. In fact, this area was previous weekly resistance, which the market broke to the upside. At that point, previous resistance was turned support. The market tested and rejected the support to the upside. However, the market then broke again below the area, and at that point, previous support is turned resistance. So the market is currently testing previous support, turn resistance, and rejecting that zone to the downside. What we also have is this candle here. Now, when you see a candle like this with a red body and a very long wick, what you expect is for the next candle to fill in this wick, possibly for the move to the downside, which is in fact exactly what the market is currently doing here from a weekly perspective. So at the moment, on the weekly, we are proceeding with the move to the downside exactly as we usually expect in this kind of situations. Going down on the daily time frame, what do we have? Now, here on the daily, I had spoken about Euro USD quite a few times in the past. I spoke about Euro USD after the market had created this overextended W formation. I made a full breakdown when the market was here, explaining all the reasons for which from here we expected the market to create this move to the downside, and in fact, that is exactly what the market did. Then we had the creation of this other W formation, and when the market was here, I made another breakdown explaining all the reasons for which from here we expected the market to create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was at this area, I made a full breakdown explaining all the reasons for which from here we expected the market to create this move to the upside. And again, that is exactly what the market did. Then, after this move to the downside, I made a full breakdown explaining why we wanted to see a retracement and then the continuation to the downside. And with the two last breakdowns, I explained why after this M formation we first wanted to see the retracement and then from here this move to the downside, which we're capitalizing on. And in fact, that is exactly what the market did. And by the way, I will link in description all this previous analysis. So all this previous analysis, you find it linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on Euro USD? Now here on the daily, one important thing that we can notice is that at the moment we have quite strong previous daily resistance, which has now supported this area. So this area here is not only strong demand on the monthly as we have already identified, but it is also strong support here from a daily perspective, from which the market can easily make a rejection to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are doing in the market, what we can see is that with the last report, hedge funds have added in extra 1.5k long positions, closing 300 shorts. So with the last report, we have 300 shorts getting closed and 1.5k longs getting opened, increasing the net positions from 133.9k all the way up to 165k net positions, reaching 238k longs and 72k shorts. So what is happening is that shorts are getting decreased during the move to the downside, meaning that hedge funds and institutions are not interested in the shorts because shorts are clearly getting decreased during the move to the downside and longs getting increased. So it's only a matter of time before we should see a rejection of the monthly demand. Now keep in mind that if you check the data for the euro, what you're actually checking is Euro USD because all currencies on the spot are traded against the USD. So this is exactly what is happening here on Euro USD from an institutional perspective. We're seeing longs getting added and shorts getting closed, meaning that the rejection is imminent. So how we will be approaching this potential opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And as soon as the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point, we will be adding Euro USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to reject the support for a retracement at least to the 0.32 of the Fibonacci taken on the daily impulse, and possibly even a retest all the way up here of the previous daily support, which at this point, now that the market has broken it to the downside, is turned resistance. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.